Vincenzo's Go Crypto Investing this August the 6th, noontime altcoin daily update. And you jabroni killers know you get about a 6-hour minimum head start as I release that first to you and then the general public as a thank you for being members and supporting this free channel where we give you, the audience, free videos every day to have you join me on our mission to become asset millionaires via gold and silver bullion and mining stocks, 401k study investing, cryptocurrencies, real estate, and of course, cash on the side for emergencies, earning 3 to 5% in bonds or CDs. And also it allows you to buy a new or add in and acquire into an existing asset. And in the video description and or pinned comment, it's as cheap as $3.99 a month to support the channel and to help keep this movement growing and to help continue to build asset millionaires like me and you on our way, although I am not a financial advisor. If we start with AMP, you can AMP has had one today where it's had one of the bigger pumps after this brief sell-off that we had yesterday across the board. And if we start here in the macro time frame, you can see we have our multi-year pattern, our 1.5 year pattern right here, where we have our major lower support is horizontal or slightly uptrending. You can see we hit it in we hit it back here in January of 24. We hit it in August of 24. We hit it in April of 25, June of 25, just north of it in August of 25. And then we have our upper resistance that's slowly descending, where you have upper resistance 1 in March of 24, then again in December of 24. And I'm anticipating as we go into the latter part of this year, before the year's out, I think we will hit this before the year's out. And we're going to make another run at least to about right there to 0.00974 before the year's out, which is about 150% move from where the price is currently. And I do think that's very plausible. And if we go now into the macro time frame, and you can see our track in the background does show going into the end of the year, it's stabilizing. And then in the next year, you can see it does have a humongous 10x return. And I do think that is plausible, but you can see in the short term what you need to know in AMP, as long as you're above the pattern support that we just talked about, our multi-year pattern support at 0.00315, you're bullish. You can see we had a little pump the other day, rejected, a little pump today. It needs to hold it and then attack this 50-day moving average and get on top of that and the 100. If you can get on top of the 100 and hold it, then you can start building some bullish base to retake out this regional high and the 200-day. But if you don't and get rejected in the short term, you're going to come back to the major underneath pattern support, which is 0.003. And what you need to know is if you break that, 0.00254 would be hit very quickly. But on the flip side, if you can break your major short-term resistance, the 200-day moving average, you could come up to the pattern next move at 0.00600. Same thing with DGB. DGB in the macro time frame, we could be in this cup and handle that we talked about several weeks ago, and several months ago, where you have your pump up, which forms the front side of the cup. The bottoming out, the rounding part is the bottom of the cup. Then you can see your neckline that formed a double top, forms your cup. And then this consolidation is the handle, which is the back test preceding the breakout. We've seen gold bullion play out in that we were following ever since my channel started from 2020 until it broke out in 2023. It had the same handle consolidation, and a targeted move out of that would actually be all the way up here to 0.09511. And that's why we have that arrow back there in the background right there pointing up to that. And if we go into the shorter term time frame, what you need to know in order to try to start to work our way up there, the first thing we need to do is, if we zoom in to the hour time frame and the micro time frame, and the most important thing you need to know in the short term is this major upper resistance is sitting here in yellow at a horizontal resistance level at 0.00839. Right now, you're just below it. You can see you got rejected by it beautifully the other day. And we're actually going to take these off now because we don't need these. You can see it actually got rejected beautifully and is taking the bearish route. And what you're going to need to do along with doing that and deleting that is to come back up and reclaim this 0.00839. And then you would get short-term bullish. As long as you're below this, you're medium-term bearish. And if you're medium-term bearish, your underneath target is 0.00567. If you can get above this and reclaim it, then you can restart attacking these moving averages and then take out the regional high from last week at the end of July up there at about 0.009, just below a penny, right? So that's what we're looking at there in DGB. If we continue to scroll, we're going to go to the bottom of these coins. Uh, MATIC, I know people like that I've had talks with on here. You can see MATIC if we zoom out. This will be just more general because we don't talk about MATIC that much. We hit our all-time low that Vincenzo predicted way back in 2020 when it was at its all-time high. You can see we hit our major upper resistance on a wick back there in July at 29 cents. That's where you need to come back up to, and this is what you need to break into, is this orange trading box in order to start to reclaim some short-term bullishness. As long as you're below that, you're extremely bearish, right? But if you can get into this orange trading box, you can get somewhat short-term bullish, but as long as you're below that, you're in price discovery to the downside, and I would not recommend buying this asset, but I know some people like to try to swing trade it or whatnot. Form had another phenomenal run off of there, it's double bottom. We've had a bullish cross now where the 50 in the daily has gotten over of the 100-day moving average, and you can see the 200-day moving average is slightly above there, which we've now had just enough data to get a daily time frame 200-day moving average. Now again, your next resistance level, just like what we had back here when we forecasted this pump in March, April, and May, is this point to 22 cents. That's your major upper resistance right now, right? And that's what we're going to have to try to attack and push through in order to get a long-term bullish and make a run at the old all-time highs. If not, if you get rejected by either where you're at now or this 20 cents, once again, uh, the underneath moving averages, the 50 and the 100 would come into play, and then below that is the 10 cents. But right now, what you need to know is 20 cents is your major upper resistance. The 200-day moving average, freshly minted in the daily, is your short-term support, but the 50 and the 100 just below that at 14 and a quarter cents is your major short-term support. DIA, you can see we had a phenomenal rally after we had the low down to 26 cents, got rejected by a dollar. Holy shit, it actually did get up there to $1.36. Somebody made a bunch of money there. But now we're starting to come to the downside, and you want to see it hold the bottom part of this red trading zone. Notice that its old resistance came all the way back around. Now you're going to try to use that as support. If not, you're going to fall back to the next level. We'll go to some of the ones that people like. IOTA, you can see it's attempting to get bullish, but every time it does, these moving averages that have been stacked just above it for several months continue to reject you, continue to reject you. So you want to stay continued. It's like it's been stay above this 16 cents or the bottom part of this red trading zone. And if you can get back above these moving averages, you can make another run up to 36 cents. If you fall through the 16 cents, 9 cents becomes your major underneath support. If we look at uh LCX, we're trying to bounce just above that point 0.9. We're coming up once again to the overhead moving averages, which have been the major downfall. And again, that's what you're going to watch for any kind of rejection are these overhead moving averages that are stacked just above the price that you don't take me to tell you ever since December of this year. It's been consistently and effectively 100% of the time knocking the price down. So if you can't get through the moving averages, your major underneath support remains 0.09. If you can get above the moving averages, you can try to work your way over a critical overhead resistance at 14 cents. Like the channel, subscribe, peace and love.